Hello everyone. Today we are going to learn the functions of the financial system. The three main functions of the financial system are as follows. The very first one is to allow entities to save and borrow money, to raise equity capital, manage risk, trade assets currently which is in present or in the future, and trade based on their estimates of asset values. The second function is to determine the returns, that is, the interest rates that equate the total supply of savings with the total demand for borrowing. The third function is to allocate capital to its most efficient uses. Let's discuss these functions uh, in the next slide, which is the very first function, achievement of purposes in the financial system. The first point is saving. We all know about savings. Individuals will save and expect a return that compensates them for risk and the use of their money. We can take example of retirement. Individuals will save for their retirement so that they don't have to work at their retirement age. We can also take example of funding for their or saving for their higher education to pursue their higher education. The second point is borrowing. Individuals may borrow in order to buy a house, to buy a car, or to fund a college education, or for other purposes. A firm may borrow in order to finance capital expenditures and for other activities, such as working capital, or to fund a major project, which may give an additional NPV, which is net present value of their project. The third point is issuing equity. Another method of raising capital is to issue equity, where the capital providers will share in any future profits. Let's take example of initial public offering or IPO, where the company will exchange their ownership for funds. That means the investor will get the ownership of the company and he will provide fund to that company, for which the investor will get ownership into that company and will get the future benefits, or let's say the future profits, which is declared by the firms in the form of dividend or increasing market share. The last point is risk management. Entities face risk from changing interest rates, currency values, commodities values, and defaults on debt, among other things. We can take example of a car manufacturing company which works in Europe and which sells its cars in North America. So the company will receive revenue in form of US dollars or the local currency of the company where the firm is manufacturing or where the firm is exporting its cars. For that, the company will have to convert the local currency or the US dollar into euros. And for that, the company will have to keep a view on currency values and changing interest rates. We'll move to the second function of the financial system, which is to determine the return. The financial system also provides a mechanism to determine the rate of return or the return on investments that equates the amount of borrowing with the amount of lending in an economy. The low rates of return increase borrowing but will also reduce saving in the economy. High rates of return increase savings, but they also reduce borrowing in the economy. The equilibrium interest rate is the rate at which the amount individuals, businesses, and governments desire to borrow is equal to the amount that individuals, businesses, and governments desire to lend, which also means that demand is equals to supply. The last function of financial system is to allocate the capital. With limited availability of capital, one of the most important functions of a financial system is to allocate capital to its most efficient uses. As long as investors are well informed regarding risk and return and markets function well, this results in an allocation to capital to its most valuable uses. Individuals can also allocate their funds in, for example, take consideration of diversifying your portfolio. You can invest in shares, you can invest in bonds and derivatives, which includes futures and option. You can also invest in commodities, which has golds, agricultural commodities, metals, and other various things. We also have commodities for weather. We have derivatives on weather for summer or for winter. So With this function, we are ending up our today's video. Thank you for watching.